Hello traders, it's Samurai Trader here. Welcome to this market recap. We're going to be looking at a number of trading opportunities, specifically in today's session on CL and GC. As always, we do need to bring up the risk disclaimer, as most of you watching this recording are members, so you'd be well aware of the risk of trading. If you haven't read the disclaimer for some time, please pause the recording and read the disclaimer. Traders, this is something that we all know, but I think we need to be reminded of. The market has a memory. You can put virtually any type of chart up, remove the time frame from that chart, and you could look at it and assume it was a monthly chart or a daily chart or a minute chart or a 1 hour chart. The patterns repeat on all time frames and all markets. It's something that's amazing about the markets, and they repeat every single day. And when it comes to trading, our job as great traders, or to master the art of trading, is to really learn how to become a master pattern trader. And I think it's perhaps one of the most important lessons I want to get across, because when we consider our trade setups, the T19, the 34Bs, the T2s, they're all patterns that we see in the market each and every day. So to really succeed as a day trader and to succeed at mastering the day trader fast track strategies, there are really three essentials. One is pattern recognition, trade execution, and trade management. And it really, if I've been thinking a lot about this, it really comes down to those things, because if you think about trade execution, that is, once you recognize the pattern and it meets all the rules and it qualifies, is executing the trade without hesitation, executing it on time. Then of course managing that trade, for an example, not moving your stops in hoping that the market's going to turn around, learning when to go to break even, for an example. That's all about trade management. So these are some of the critical factors that we need to master as day traders. Now this is easier said than done, but critical to your success as a day trader is to trade what you see, not what you think. And this gets back to our patterns and mastering our day trader fast track patterns and strategies. Now just a couple of important points that really, running a trading room and going from one market to another, when you look back at my training videos, rarely will you see me trading any more than one market, because I find it personally very distracting. I also will turn off all distractions. I rarely will have the TV on. I might have some music going in the background, etc., but I stay focused. So I just want to go through a couple of key points there. Allow no distractions, no phone calls. Normally, of course, if you're not in our chat room, I'd say, look, be very careful watching CNBC and a whole lot of other things, being distracted or being thrown off your game. That is, allow nothing to distract you when you trade. Now it's your pattern recognition skills that are key to your success, not waiting for someone else to tell you what to do. So in other words, when I'm teaching you in the room the setups, what I want you to be able to do is to learn as quickly as possible the patterns. And I really don't mind if you say, hey Ray, is this a 34B, or there's a 34B setting up, as some members do, or is there divergence? As when I'm talking to you or I'm giving commentary on one market, I'm sometimes missing out on a key setup on another market, etc. So I really don't mind you mentioning it to me. But also be very careful if I say something against perhaps a setup that you take every time, don't be thrown off by my comments. Okay, if it still fits within your trading rules, take the trade. That's very important. Follow your trading plan. Now we don't want to be distracted when we're trading. As I mentioned, we need to be focused to see the opportunity. So specifically when we look at CL or we look at gold, how many opportunities do we get? Every hour, every 5 or 10 minutes, there's an opportunity. So just be careful how many different markets you're trading at the one time. So a couple of key points from today is this: focus on one market unless you're focused on trading T19s only. Now if you're purely focused on divergence trading and just looking for the best of the best, you might only have one great divergence trade every 30 minutes to an hour. So therefore you may have multiple markets. But if you're trend trading, say the 233 tick on CL, yes, you will get quiet times of sometimes an hour, but then you'll see the market go crazy for an hour and you might have 10 or 15 trading opportunities. So focus on market unless you rarely get a trade set up. As we saw today, a couple of times I was caught, specifically once, one specific trade I was caught of a pivot bounce. So beware of pivot bounces, and you hear me cuss and curse pivots all the time because we bounce off them, and the crazy thing is you never know when you're going to get a pivot bounce. Now with floor pivots, they're in many ways a self-fulfilling prophecy because so many traders trade them. So be very cautious of pivot bounces. Now if you don't have pivot software yourself, I post the pivot levels that I use for CL, NQ, and now gold in the on the Rooms software as a downloadable file each day. So you can download it each day and look at my pivot levels. Just draw a horizontal line on your charts. Another thing, trade like a casino, and I think this is something that I wanted to get across. You'll see me perhaps execute a trade on CL and gold and maybe NQ, and then go back and miss 3 or 4 trades on, say, CL. And the ones you miss, Murphy's law is they're always the losers, and this is why you need to be consistent. Now this is what gives the casino the house edge, their rules and probabilities. And you hear me quote this all the time. Do you see the dealer missing a hand or changing the rules because the house just had, say, 3 losing hands in a row? Of course not. They follow the rules exactly, and that's why it's critical that if you're trading 34 Bs that you keep taking the 34 Bs. And likewise, if you have a loss, you take the next trade if it qualifies and meets the rules. Trade what you see, not what you think. The next thing is to make sure you keep a trading journal. Absolutely critical. That way you can go back and review the good, the bad, and the ugly of your trades for the day. And that gets back to, then ties in really spontaneous trading is for amateurs, and amateurs lose. Sometimes I slapped myself around, and I did it again today, twice. I jumped in, I was tired, and I jumped in on trades in the corner of my eye without thinking. Okay, now that is that's what amateurs do, and I really come down on myself for that. And at times in the room, I'm human, and I want to call good trades for you, and you don't want to be wrong, and I'm trying to call trades on multiple markets because in the room we have many traders trading multiple markets. And even myself, I've got to remind myself to slow down, take 10 seconds, review, look at it. Does it meet the rules, instead of jumping on and what it really comes down, the fear of missing out. And it's a mistake that every trader makes, and even I make when I'm not focused. And so it's important, as you know, that I share mistakes I make so that you can learn from that. And that's the thing, is to what can I learn from Ray? How can I learn from this? How can I improve my trading? And last of all, trading is really easy. And this is, I know it's a bit of a cliche, but it's true in so many ways. Buy dips and sell the rallies. The trend is my friend. What we have to be very careful of when we are counter trend trading is those channels, and we saw it again today with CL. I think it was where you could have got caught in 4 or 5 divergence trades in a row where the market really was in a channel, and in a way you can almost see it here right now. Now this is actual gold. We can see of the Globex session now, so it's very early morning. It's actually 4:39 a.m. New York time, and we can see that the 34 EMA is running parallel with the 89 and almost with the 200. So you can be caught. Yes, you could scalp a couple of ticks here, but really this is a trading range, a channel that you're in. You can basically draw parallel line by simply going from linking 3 of these points, parallel line, drag it across, and you'll see we're in almost a perfect channel. That's one of the things that you need to be ultra careful of. So let's now go and have a look at CL. So what I want to do is to show you some price action from today, and let's just go back here. Where are we here? Let me just scroll back. Wrong chart. Let me get the right chart up for you. and here we go. Right, so this is starting from 6 a.m. basically 6 a.m. this morning, and we can see that we had up here, you can't really see any divergence, and there was no divergence obvious on our 233, so there's no real divergence. But on the 89 tick, a much lower time frame than the 233 tick, so this is CL 233 tick, there was divergence on the MACD on the 89 tick. So remember, during the Globex session, if you want to really drill down, go to a lower time frame. And so I like the 89 to maybe the 144, but the 89 tick is pretty much tradable during the Globex session. We come down, and what we're looking for is, we're really looking for traders the sweet spot on CL. Yes, you will get quiet days, I know, but generally speaking, if you wait for the sweet spot, you'll get the sweet spot. The sweet spot, of course, is when we start to get all of the EMAs aligned, and what I call fanning. And excuse the writing, this is from this morning, so I've just left it on here. That the key points here is that the 89, the 34 is under the 89, and the 8's under the 34, and so they're fanning apart, and we can see the pullbacks. Okay, so that's a 34B, that's an 89 and a 34B. Yes, here we also had a bounce with divergence off for 535. Now the 535 EMA matches almost within a tick a 200 EMA on the 377. Sorry, my apologies. On the the three, sorry, no, it's not the 377. Let me just get this right here. The 610. Okay, let me get this right. So let me start again. For 535 EMA virtually matches the 200 EMA from the 610 tick chart, which is the high time frame I recommend you use on CL. And you'll see here it acts as support. There you had resistance. Now here you can scalp off 4 or 5 ticks, and remember, when you take a divergence trade, and this is a difference, one of the big differences between trend trading, when you are trading with the trend in front of you, you don't have support resistance, unless of course you're going up to a previous high. So let me take that back, there is support resistance, but what I wanted to say is there's no major EMAs straight in front of your trading. So here we're trading with the trend, we're going down, down, down. There's no EMAs, okay, which act as support and resistance big time. So here you can see here we're trading, and we bounced here on support, which is an EMA from a higher time frame. We went up there, we bounced off of 34, bounced on the 535, bounced again, come down. Now we've finally broken of the EMAs, but we come up, we bounce off for 34, bounce off for 34, bounce off for 34. So you can see the resistance of the major EMAs. And so by not taking every trade, and here you had 1, 2, 3. Now this was pit open. Some of our traders, as soon as they see the trend direction, I'll still jump in and trade the pit. Now just practice that in sim initially. If that works for you, we'll trade it. I don't trade the opens, but if it works, trade it. Depends on your trading style. 34B, 34B, 34B. So you've had 4 or 5 in a row. This is where it's critical that you take them, because you can see here we had another 34. This is a cross between a 34 and 89. Then we had some divergence. This one actually failed, but then you had an 89B, an 89B. This is a sweet spot. Now you would have wrapped up your trading for the day basically on here. Now coming down, you then had a 34B, and here was a loss. Now this is what I want to mention when it comes to what I call cherry picking, or jumping, or not really taking every trade. And if you're focused, you've got the opportunity to get in and take the trade, providing, like here, this probably would have been a loss for you, but you know what, you just had 7 or 8 winners in a row, and you just had another 1, 2, loss, winner, winner. Okay, so but if you jump in, say for an example, when you're going from one market to another, jump in on this one, a loss. Okay, you know, you jump on this, okay, it's a small winner, you barely get a winner out of it. And okay, and all right, you jump to another chart and you miss out on this 89B. I think you're getting a drift. You've got to be like the casino and be consistent. This is one of the things I really wanted to get across. Now the purpose of Room here, of course, is to give you a variety and to teach you a variety of trading strategies, methodologies, and what we apply on CL works on gold, it works on the ES, it works on futures, forex, all markets and all time frames. So even if I'm looking, if you're trading a CL trader, stay on your CL trader, on your CL chart. Let me get this over to you right. Stay on the CL chart, but look what I'm showing on gold, because exactly the same setup will work on the market if you're trading. So we can see once again we're coming down. We had then a 34B that failed, 89, sorry, that was a 34.89 really, 89, 200, then the 34s. Now as we know, the best T20s, of course the T20s when we get the 8 crossing through the 34, are when you're trading in the direction of the 89 EMA. Coming down, there's something else I wanted to show you here. Here we come down here, and this is what I wanted to mention, and this takes courage in many ways. You've probably heard me say to be very cautious after 3 34Bs in a row. This is very relevant to the ES market particularly. What I find is on, say, CL and gold, it's not uncommon to get a lot more longer term trends set up. Just be aware of that. It's very easy to say, well, I can't believe that the trend's going to continue like these 34Bs, but we see this at least once a day on CL, where you get a market like this, and there was just some incredible profit opportunities. And as I said, you would have picked up your $200 to $300 per contract, maybe even more, in that one trend, and wrapped up within an hour. So I just want you to consider that. Now another setup I want you to think about here is that the 200B. Now the 200B by its nature is not as accurate as, say, a 34B. Why? It's a much deeper pullback, which quite often signifies a change in market direction. And we can see this is one that set up today, and we had a pullback, and I think this was when I handed over to John today, and I jumped in, and if you remember correctly, I was actually in the red. And if you look down, and let me just try to pull this up for you. You'll see it in the room. Anyhow, I ended up 540 up for the day, where I was down, as I took 4 or 5 trades on gold and CL straight after John took over, and this was one of them. And quite often you'll have a failed trade, and if you want to be conservative, what you'll actually do when you have a 200, yes, you're going to miss some. If you jump straight in on this, many times I'll take off and you were safe. But if you wanted to be conservative, is to wait for divergence to set up, or wait for the second entry if you want to be conservative with your 200. Now also I want you to keep an eye on these when you get these higher lows, as we see quite often. Further along, after John had taken over, we can see here there were some other great opportunities. We went up, we had a bounce on the 535. There was no divergence, but then divergence set up. So you had a divergence and a bounce acting as resistance on the 535. So what you were effectively then doing is trading off a 200 EMA on a higher time frame, and that specific trade worked beautifully. Let's now go and have a look at gold. Now with gold, very similar today, and I'll see if I can get this one up. Let me just try something here. Okay, so looking at price action today, you'll see we had, once again, this is 8 a.m., 7 a.m., 8 a.m. in the morning, some fantastic opportunities, and at $10 a tick you can see you get some big moves in gold, some big moves. Now here, yes, you had a failed 34B, but you had an entry. And by the way, you may notice I've left the 21 EMA on, because the 21 EMA for 21 EMA bounces works really well on gold. So 34B, 21B, 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 34B, all trading with the trend. Now down here you did get and I've it says here pivot bounce. My pivots have turned off because on some of my on my program I can either have it, actually let me just put it back on, let me turn it on, it's easier. There we go, turn it back on. So we had a pivot bounce and divergence. Now you easily had 5 or 6 ticks in that move. Now as a reminder, traders, when you get a bounce on a pivot and you get divergence, okay, it's just, I suppose, the pivot bounce with divergence adds another 5 to 10% to your trade actually coming off. But getting back to the original concept I spoke about, notice how the EMAs act as major resistance, and this is where the more room or air or spacing between your entry on a divergence trade and your major EMAs, the better. And you can see here we actually bounced off a 21 EMA. You had some angulation, okay, you hadn't quite touched the pivot, and this is one thing just I want you to keep be aware of. It's much better if you've come down and hit the pivot. Quite often you'll see this is that you might be 5-10 ticks off the pivot, you get a divergence entry or some sort of entry, it goes up, then finally comes down and hits the pivot and stops you out. Just be aware of that spacing in between pivots. And another thing with pivots is this, when you get the floor pivot, which is the yellow pivot, and you're starting to trend down, in the back of your mind you know there's a very high probability you are going to hit the, in this case, the S1, and if you break through this and start trending down, then the S2. Be aware of that, because it means that if you're going to take a trade, a counter trend trade, and you're halfway and the pivot's down here and you're heading towards a pivot, it increases the probabilities of the trade reversing and continuing back in the trend direction. So just be aware of that. And traders, you need to, and I hope you're taking notes on some of these key points, and go back and replay this, because sometimes when I'm trading live, and I forget to mention some of these important things, but it's really important, is that floor pivot will travel down to, or travel up to, either the R1 or the S1. Very high probability. When you get a major bounce and all the EMAs bounce, there's a higher probability or a chance you may head up back up to the floor pivot. Just be aware of that. Not always, but just be aware of it. So here we've come down, had a pivot bounce. Now be very aware here also, and I got caught on a trade today and I was cussing myself again. By the way, I cuss myself a great deal, as you know, in the room. I try not to swear too much, but entering a trade just before the pivot, how often have I said don't do it? Pivots are a curse. Now when I say a curse, some traders say they trade pivot bounces very successfully. Well, look, pivots you can bounce, as we can see here, but then you bounce off them and then you come back down, you bounce on. So I've never found an outstanding way of just trading pivot bounces on their own. But when you get an entry and you're just above a pivot like this here, it really pays you to sit it out, because the amount of times, it's a bit like having a major, well, it is a pivot is a self-fulfilling prophecy. It's an area of support or resistance, and here you had a 34B and it bounced straight off the 34B, let alone this particular one being a strong divergence trade. Now remembering on gold, I've spoken about this, a lot of the 34Bs straight after divergence on gold seem to come off, unlike CL or other markets where I stand aside. So we've come up another 34B, and once again the saying, follow the gold. If you're above the gold, you want to be long. If you're under it, you want to be short. Just keep that in mind. Now a lot of this stuff, of course, you already know. Now this is another one of these damn curse trades, and I did one on Thursday last week, and I damn well did it again today. Geez, I can't stress enough about being focused when you trade. Now this is not an excuse, by the way. It's a mistake I made. Be aware of this. When you see your EMAs intertwined like this, just sit the damn trade out. That's what I would recommend, unless it works for you, unless you've got a technique that you use that works. So that's always a caveat, of course. If it works for you, do it. But I've just been caught that many times here, so I shorted this on the basis that everything was looking good, okay? But notice here how the 34 was still above the 89. Now remember the rule of 5. What you ideally want is 5 EMAs in your trend direction, 3 on your entry chart, 2 on your anchor chart. You want to have the 34 under the 89 and the 8 under the 34 for a short, along with the 8 under the 34 on the anchor chart trending in your direction here. Anyway, as I said, I journal these. I look back. Yes, I slap myself around, and I'll get it in my thick head even in the room. I would not normally trade these. I'm trying to give you trades, but I don't understand. Once again, I don't want to be blaming. The fact is I stuffed up. It's a mistake, but I want you to learn from that mistake. Look at this here. The 8 was still above the, in this particular case, the 89, and so it was, look, just stay out of these. And here I got 1 tick slippage because the gold moved that quickly. Up here you can see there we then had a T3 and a bounce on the 535. These work really well and track these, and remember on the T3 you'll see clear separation on your anchor chart as well. And we had this down here on this particular move was a nice T3 as well. And but something else I want to, what is the pattern you can see here? The pattern is, notice this cup like, this bubble formation or a dip that you get here, angulation, whatever we want to call it. Okay, notice how price is angling away from the 34 and the 89. You've got, if you like, you're driving a wedge in there. It's opening up, its price action is separating. All right, these are what you want when it comes to counter trend trading. This is what you really want. You had one, basically you can see that starting to happen there in a bounce. You had it here. You had a T3 basically setting up here with divergence. Right, that's what you want to be looking for. Down here you had an 89B. Now what's the difference between this, okay, and this one? Well, here the 34 EMA is above the 89 and the 8 EMA is above. All right, now if you're unsure, don't trade, wait for your next entry, and just here it come down and it bounced again and you had a secondary entry. So moving along, then there were lots of okay, this is another one of the damn setups where I stuffed up again. Okay, don't force a trade. I shorted here against the T3. Now here the 34 was under it, and anyway it went against me, and the thing here, I said to you, don't force a trade. Shorted against the T3. It was a T3, but anyway that didn't work out. Then 34B, 89B. Now this one here would have stopped you by 1 tick if you had a tight stop, but then you had a re-entry, you had a re-entry, you had a re-entry, and this is what I mean about these 34Bs straight after T3s or divergence trades. Now in that one you could have easily picked up your 5 or 6 ticks, and you can still do very well scalping your 5 or 6 ticks. And just be aware, if you feel the market's going to turn, take some profit, pull your stop up. But remember, you're doing it for the right reasons. And if the market stalls, or say if you get a T1 plot against you, now let's just say you took this trade looking to head higher, and okay, your stops under here, and just say you get a reversal signal or an engulfing candle, exit. You might get out breaking even, or maybe losing two or three ticks. You can, once again, there's going to be another trade, as there was around the corner, an 89B. So traders, I'll wrap this up. It's nearly 30 minutes. We're going to start doing these on a regular basis, probably not every trading day, but most trading days. We're going to go back and just do a recap of the trading opportunities of the day.